Welcome to the Market Update with Scott Cook. Today is Sunday, July 23rd, 2023. Last week, stocks closed modestly unchanged as the Dow clinched its 10th consecutive day of gains. Now, that happened in the midst of earnings season for quarter two. Last week's corporate earnings have smoothed over some concerns about the strength of U.S. consumers and the stability of the financial system, especially after the banking crisis earlier this spring. As the market now awaits big tech results, attention has turned towards Microsoft's upcoming earnings report. This follows a somewhat disappointing performance from Tesla and Netflix, which contributed to the big drop in the NASDAQ on Thursday. Another point of focus in the coming week will be the Federal Reserve's policy decision, primarily concerned with the potential for the U.S. economy to stave off a significant slowdown. Encouraging data flow has suggested good results with the central bank's ongoing efforts to raise interest rates. So, will stocks continue to climb heading into the Fed's next meeting? The Dow, like I said earlier, has closed 10 positive sessions in a row, only 15 times since 1920, making it a relatively rare event. Short-term outcomes don't necessarily paint an overwhelmingly positive picture. So the price only goes up the next week about 60% of the time, and that only about a 0.5%. So don't expect some huge moves this week because we may be a little bit overbought after 10 consecutive up days. Normally, we'll get some small pullbacks. But if you look at things on a longer time frame, the statistics actually look pretty good. After about 6 months of this type of activity, 10 up days in a row, the Dow has been found to increase about 80% of the time with an average gain of 2.5%. So longer term, this looks good, but this upcoming week, expect some profit taking. Existing home sales dropped to the slowest pace in 14 years as low supply chokes the market. June home sales were 18.9% lower compared with last year, falling to a seasonally adjusted annualized rate of 4.16 million units. Sales of pre-owned homes dropped 3.3% in June compared with May, running at a seasonally adjusted annualized rate of 4.16 million units according to the National Association of Realtors. Compared with June of last year, sales were lower by 18.9%. That's the slowest sales pace for June since 2009. The continued weakness in the housing market is not for a lack of demand. It's all about a critical shortage of supply. There were just 1.08 million homes for sale at the end of June, 13.6 less than June of 2022. At the current sales pace, that represents a 3.1 month supply. A 6-month supply is considered balanced between buyer and seller. Mr. Lawrence Yun, who is chief economist for the realtors, says there's just not enough homes for sale. The market can easily absorb a doubling of inventory. The U.S. LEI, which stands for Leading Economic Index, and it's basically providing an early indication of significant turning points in the business cycle and where the economy is heading in the near term. Well, it fell again in June, fueled by gloomier consumer expectations, weaker new orders, and increased number of initial claims for unemployment. Also, reduction in housing construction. The leading index has been in decline for 15 months, which is the longest streak of consecutive decreases since 2007-2008 during the run-up to the Great Recession. Taken together, June's data suggests economic activity will continue to decelerate in the months ahead. The forecast is that the U.S. economy is likely to be in recession from quarter 3 of 2023 to quarter 1 of 2024. Elevated prices, tighter monetary policy, harder to get credit, and reduced government spending are poised to dampen economic growth further. Having said that, Goldman Sachs cuts probability of a recession in the next year following a whole bunch of positive economic data. They now only believe there's a 20 to 25% chance that the US experiences a recession in the next 12 months. If you follow the stock TSMC, which is a big chip maker, you should know that they have delayed the start of its Arizona chip factory due to a shortage of skilled labor. The company noted they're sending trained technicians from Taiwan to train local workers. Apple has plans to use chips built at that plant. Also, Ford cuts the price of its F-150 Lightning by $10,000, saying its efforts to boost production and lower costs for battery minerals have paid off. The starting price of the cheapest version of the truck now starts at a low price of $50,000. And then just to give you some brief updates on important economic news around the world, Canada's inflation falls to a 27-month low of 2.8% in June, led by lower energy prices. However, food and shelter inflation persists despite 10 interest rate hikes in less than 18 months. Analysts were expecting inflation to drop to 3%. So they're a little bit better than the expectation. China misses their quarter 2 GDP growth estimates as the economy struggles to reopen as planned. The economy grew 0.8%, so not even 1% in the second quarter, slower than the 2.2% quarter-over-quarter pace recorded in the first 3 months of the year. Inflation in the UK cooled off dramatically in June as the CPI fell to 7.9 versus the estimate of 8.2%. CPI seems to have peaked at 11.1% in October, excluding food and energy. All that basically means is inflation in the UK cooled off dramatically. Russia cut its landmark grain deal with the Ukraine just hours before the deadline. First signed in July 2022, the UN-brokered Black Sea Grain Initiative has been repeatedly extended in short increments. Netflix starts password crackdown in India and every other global market after its previous limited rollout helped add nearly 6 million new subscribers in quarter 2. Netflix has struggled to continue its amazing growth that we saw in 2020 and 2021. Let's do just a little bit of technical analysis to look at what to expect in the next week. So we've already talked about how the Dow has had 10 consecutive up days, and we are due for a bit of a pullback. I like to look at the QQQ because it tends to lead the rest of the market, and I like to use a 10-day simple moving average and a 50-day simple moving average and look at how they're interacting with each other. So in this case, the 10 crossed above the 50 a little while ago, and that's a good buy sign. And this happened back in the middle of June, and look what we've done since. It's just been up and up and up. Let's just zoom in and see where we're at right now. It looks like the Qs have crossed down below that 10-day moving average. Now, if the Qs lead the way and the Dow is overextended, I'd be looking for a bit of a pullback over the next week or two. At the same time, it's hard to ignore a good, strong uptrend like this, and the 10-day moving average is still above the 50, so that's very encouraging, but if you're a very short-term trader, look to protect some of those profits. If you're a longer-term trend trader, right now this chart is looking excellent. Looking at this week ahead, there are some important economic announcements, but what we're really looking for is Wednesday, the FOMC press conference. If I click on this folder right here, it gives you a rundown. It says that the press conference is about an hour long and has 2 parts. First of all, you have a prepared statement that's read, then the conference, which is open to press questions. Now, these questions often lead to unscripted answers that could create huge volatility in the market. The press conference is webcasted on the Fed's YouTube channel in real time. So here's the Fed's YouTube channel. You can actually do a search up at the top, Fed YouTube channel, and it'll take you here. I've clicked on videos, and you can see the last FOMC press conference. But again, this will be live streamed, so you can watch it as it happens and see how the market reacts. So that was this week's market update, the recent past, the present, and the near future of the market conditions. Go out there and make some money this week, and may luck ever be on your side.